Alright, this video may not be what you want to hear, but it's probably what you need to hear. If you're searching for the best personal loan company to apply to, I'm going to save you a lot of time right now. There's no universal best company, and believing there is exactly why so many people keep getting denied. In this video, I'll explain how lenders actually decide who they approve, why different people need completely different options, and in a minute, I'll show you the smarter way people avoid guessing altogether. Most people think there's some secret list out there, the best company, the easiest approval, the one everyone should apply to, but that's not how lending works. Loan companies don't approve based on ads, rankings, or who looks best on Google. They approve based on your profile. That includes like your credit score, credit history, debt to income ratio, income type, and sometimes even your state. So when people ask, what's the best personal loan company? They're usually asking the wrong question. Here's a simple example. Someone with strong credit in a W-2 job usually fits traditional banks and credit unions, lower rates, longer terms, fewer surprises. But someone who's self-employed, rebuilding credit, or has a thinner file, even with a solid income, often needs a completely different type of lender. And that's where alternative lenders come in. They're more flexible, but they also take on more risk, which changes approvals, terms, and pricing. Same person, same income, very different outcomes. Behind the scenes, most lenders are asking the same questions. How predictable is this person? How likely are they to repay? How much risk are we taking on? Traditional lenders want stability. Alternative lenders accept more variability, but they price that risk higher to offset the default rates. So when people see higher rates, it's not random, it's math. And this is important because once you understand that, your strategy changes. Here's a huge thing most people don't realize. The companies you hear about the most, the ones with the biggest ads and the brand recognition, aren't automatically the best companies for you. Big marketing budgets don't equal better approvals. And here's the part that really trips people up. When you apply through multiple sites, a lot of them are sending your application to the same exact lenders. So it feels like you've exhausted your options when in reality, you've just been recycled through the same pool of lenders. This is where the approach matters more than the brand name. Sometimes the difference between an approval and a decline isn't your credit changing. It's simply reaching a different set of lenders with different risk models. That's why platforms built to route applications based on fit exist. That's also where tools like honestloans.net comes in, not as the best loan company, but it's a way to avoid guessing and get matched across multiple lenders at once. Same profile, different routing, different outcome. This approach tends to make the most sense if you've been denied before, your credit isn't perfect, you're self-employed or non-traditional, or you're tired of applying blind. It's not magic, and it's not always the cheapest option, but for a lot of people, it's far more efficient than chasing one lender at a time. So if you're asking who is the universal best personal loan company, there isn't one. But there is a best approach. If you want to start there, I've linked honestloans.net in the description. It lets you check multiple options at once and route you based on your profile instead of hype. As always, compare offers, read the terms, and make sure everything you choose actually fits your situation. If this helped, consider liking the video and subscribing for more straightforward breakdowns around loans, access to money, and financial decisions without the noise.